Hello guys, welcome to today's video. I'll be talking about the breaker block, the order block and the fair value gap. These are ICT entry models and I want to be discussing them with you today. So if this is your first time coming to this channel or visiting this channel, please do well to subscribe to this channel, give this video a like, a thumbs up, and also recommend this video to your friends who you think that they will be willing or they want to learn something like these entry models. So without wasting much time, let us jump into the chart. This is on a good chart, the 4 hours chart now. So before I take my entries, take note, I said I'll be talking about breaker blocks, order blocks, and fair value gaps in this video. But without you knowing the trend of the market, if you don't know where the market is headed, it will be very difficult for you to take tricks. So that is why before you come into the market, you want to first of all know where the trend of the market is, where is the market headed. So that is why you want to draw your trend lines. Like you can see at this point, I took my trend lines from this point. I do trend lines to this point. So the market is telling me now that the gold is trending. Yeah, gold is trending. But specifically in this video, I'll be making references to what happened on Thursday and on Friday before NFP. So you will do well to stick to the end of this video because you're going to learn a lot. So let's jump back to the video. As I've said before, I want to determine the trend of the market. So at this point, the trend of the market is what? Is bullish at this point. So that is one. So where do I get my trend of the market? I usually go to the 4 hours chart or the 1 hours chart. This place tells me where the market is headed. They don't lie. And two, gold is a pair that respects zones a lot. So gold respects zones very well. So if you know how to plot your zone, these zones are support and resistance zone, you find it very easy to milk gold. So at this point, gold is forming some trends. Let me put that, or forming some zones. Like you can see here, the resistance level here. Then when price came down, broke the resistance level here, price turned support at this point, from under resistance at this point. Yeah, price came down, formed support at this point, broke again, formed resistance at this very top. Now you see price all the way to this level, break this resistance here, and then continue to the upside. So that is it about gold. Gold respect zones a lot, and you can find it like this. Let me just pull that out immediately. On this page here, right here, you can see what we are saying. So gold love forming. If it's in a bullish trend, you want to see gold make something like this, form a resistance at this point, then here comes here and break that resistance. This resistance will become support in future, so you want to mark it out. So price might come down. If price come down to this level, price will want to what? Respect this zone that has become support, or maybe takes it low. Here as well, gold is forming support at this point as well. So gold might want to come down to this point right here, then and do what? And expand and continues an uptrend like that. So that is it on that. So back to the chart. So at this point, gold was making series of higher highs and also respecting trend. So that is telling me that gold is on a bullish trend. So let me drop to my 1 hour to show that as well. So on the 1 hour chart, we can see it very clear at this point that gold was actually respecting the zone. As we've said, gold respects zones a lot. Now look at it from here. You notice that gold made a high here. At this point, came down. Here it was a resistance at this point. Now price has broken that resistance level at this point, forming support at this point as well, and forming another resistance at this point. Came down to form support. This support holds. The price broke it again, and like that and like that. So that is it on gold. So gold respects zones a lot, and if you want to trade gold, you must know your support and resistance. Now to the entry model I was talking about. Remember at the beginning of the video, I said I'll be talking more of the entry patterns or the entry model, the breaker blocks, the order blocks, and fair value gap. There's something that really happened that I want to share with you guys. So I'm dropping down to my 15 minutes time frame because on my 5 minute start, I'm going to say, because this is where I take my trade. Yeah, this is where I take my trade, my entries are always on the 15 minutes charts. So this is it here. At this point, before price started making to the upside like this, before price started moving up at this point, there was something that I was expecting. Price was at this point coming down. Then I saw this bearish movement, and this was a zone from the 4 hours charts. This is a zone, this place is a zone. So I was anticipating price to come and play inside this zone, then expand to the upside. So what was I looking for? Now on my charts, I saw something very, very interesting. I've marked it out already. I saw a low right here. Let me mark that. I saw a low right here, a high, a lower low, and a higher high. So when this forms, what this is telling me that price is about to change from bearish to what? To bullish. So price is about to change in direction. This direction. So forming what we call the low, the high, the lower low, and the higher high. So this is where my confluences come in, the breaker blocks and other blocks with alongside with fair value gap. So what is a breaker block? A breaker block is an ICT entry strategy that tells you that price is about to change. Yeah, price is about to change direction. So where is my breaker block at this point? Now at this point, my breaker block will be here. Now take note of this bullish candle and this other bullish candle. I would like to enlarge this for you to see it very well. So as I've said before, take note of these two bullish candles. So the opening price of this candle and the closing price of those candles are my breaker block. So I want to see price react off this breaker block if price should expand to the upside. So what did I do? I picked my rectangle box. You can see it right here. I picked my rectangle box and marked that candle out and I extended it in future. So now a breaker block must have a fair value gap. So if it doesn't have a fair value gap, that breaker block is not valid. So for the breaker block to be valid, it must have a fair value gap. So where is the fair value gap in this instance? So the fair value gap is here. Let me mark that out. So this red candle, the wick of this red candle, and also the wick of this bullish candle. Can you see that? And I've marked that out already. Yeah, I didn't want this video to be too long, so I marked that out before the video so you can see it. And what did I do? I also use a rectangle box to mark it out, the fair value gap. And you see I have also named it right here. So the breaker block as well, I also named the breaker block. If I extend to the future, let me extend it because I extended it to the future. You can see here, this is the breaker block. The box right here is the breaker block. So what of the other block? Now when I see this kind of formation, low, a high, yeah, when I see this kind of formation, low, high, lower low, and what, higher high, yeah, I also want to put my my other block as well. I want to look for the other block. So where is the other block at this point? If you look closely, I mark out my other block as this candle and this candle, the closing price of this candle. Yeah, the closing price of this bullish candle is my other block. So what is another block? Another block tells me that a trend wants to continue. Maybe a trend does something like this. Yeah, let me shrink this a bit. So maybe price does something like this. So price is coming bearish, price moved up and what, and come down. My other block tells me that price will want to what, pull back and come down. So it's a continuation pattern. The other blocks are continuation what, pattern. They are continuation pattern. While the breaker blocks is telling me that, oh, price it was bearish. So at the point price pulled back up, and instead of continuing to the downside, it's continuing to what, to expand to the upside. So this is what my breaker block. So I've said the other block is what is a continuation pattern. So that is it here now. So where will I add my other block? Yeah, my breaker block, look closely. As I've said before, my breaker block is the opening price of the closing price of this very particular candle. I'm sorry, let me bring that back. Yeah, of this very particular candle. Can you see it here? So I've marked that out as well. I've also marked that out and I've labeled it already. So if I shrink my chart again, you can see that I added it here. This is the breaker block. Hope you are seeing it at this point. The breaker block is at this point. This is it. I said in the future. So now back to what I was saying. Now, as long as I want price to continue to, as long as price, not me, because I don't control the market, you don't control the market, you just wait for the market to print whatever it wants to print. So as long as the market will continue bullish, see price do something like this, sorry about this, so I still want to continue to see price close above the breaker block, no, above the other block first of all, and react inside the breaker block. Now, do we see something forming like that? Let me increase this chart now. Now, can you see it here now? Then inside the other block right here, inside the other block right at this point, you see that price moved up here, came back and reacted inside the what? The breaker block. Do we see it? Now price is also reacting off the fair value gap at this point inside, but the price, do you see how interesting it is? Price never did what? Never closes below the other block. Now price continued to react inside the breaker block but didn't close above the what? The other block. Can you see where the other block is? You see as this candle came down from this point, came here and melted back up. Do you see it? Price came here and melted back up at this point. Also price came down, melted back up at this point. It didn't close below the other block. So that is it. So as long as price continue to move up, I want to see price continue to close above the other block and not below the other block. Once price closes below that other block, my trend has changed. So that is it here. So what did price do? After so many reactions, price just swerved, moved to the upside, came down again. Do you see something interesting? Price moved up, came down again, and reacted above our what? Breaker block, and also very close to the what? To the breaker block. Price reacted on the other block, and you see it, price also what? Moved up. But then at some point, price came down to this level. Can you see that? Price came down to this level and closed below our breaker block and also our other block. So what is this telling us? My bias has what? The bias has what? Changed. My bias has changed to what? From bullishness to what? To bearishness. So that is it. So I will now want to look forward for sell entries. But what made me to know that price has changed? This is actually because of what happened right here. Yeah, this is actually about what happened right here. Let me show you this chart. At this point, price came out at this point. Yeah, we had a high here, one. Now price swept this high, causing a break of structure. Now, whenever you see a break of structure, we expect price to continue to move upward. Like, let me explain that in this. Now, let me explain it like this. Whenever you see a break of structure, you want to see price, a big break of structure, BOS, you want to see price do something like this. Price is moving upward at this point. Now price broke structure. Now you want to see price also come down to this level and do what? And continue that bullishness. But for the fact that price broke structure in this level, price did something like this, broke structure, then came down and closed below this low. Yeah, that's telling me that price has done something. So price has broken structure and changed character by closing below this low. Now this is giving us what we call CHOCH. We call this chalk in ICT model. So this is telling me that price wants to what? Price wants to continue to what? Come down. So what will I look for? I'll look for a fair value gap around this level and what? Allow price to move into the fair value gap, fill the fair value gap and what, and drop lower. So that is what has happened at this point. So at this point, back to the chart, price broke structure, right? Price broke structure at this point, came down and closed below this low right here, and that low is our order block 2 and our breaker block. Price closed below this low. Do we see that? Efficient, very very efficient. Then after price has closed below that low, I said in the other clip that I want to look for what? For fair value gap. And where is the fair value gap? I have to drop down to the 15-minute chart to get a clearer view of the fair value gap. So let me drop down to the 15-minute chart. So now, on the 15-minute chart, now on the 15-minute chart, I'm looking for my fair value gap. So where is the fair value gap after the change of character? The fair value gap, as we know, fair value gaps are imbalances that is created between three candles. Now, where's the fair value gap at this point? Let me increase this. So this is the fair value gap right here. So the fair value gap is this candle, this wick, and also this upper part of this candle. All right, yes. So this spaces in between, the space between this candle and this candle is what the fair value gap. If you can see at this point, I marked it out already as FVG. So that is my what, my breaker block, my fair value gap. So let me drop out to the 5-minute chart because that's where I took my entry. So what was I expecting? I was expecting price to do what? To tap into that fair value gap. You see it after the change of character, price dropped into the fair value gap and did what? And dropped evenly. See it. Very very simple models using breaker blocks, order blocks, and fair value gap. And I've said before, whenever you want to use your breaker block, your fair value gap, no, your breaker block, you must pair them with fair value gap. If your breaker block doesn't have a fair value gap, that breaker block is invalid. Same goes to other blocks. When your other blocks don't have fair value gap, it is invalid. So you want to, whenever you want to use this kind of entry models, you want to look for your breaker blocks with fair value gap, and also other blocks with what? Fair value gap. So that is it. So whenever we have a change of character, as what happened at this point, we had a change of character right here. Price closed below our order block. Price moved up into the fair value gap, filled it very efficiently, and what? And dropped. And also respecting the trend. Yeah, I don't want to talk about this, but let me just talk about it a bit, just to touch it a bit. You can see there's a trend line coming from below at this point right here. So at this point, there's a trend line coming from below. You see it, and price respected that trend line right here. Price respected the trend line, and you see how price continued to what? To drop immediately after price touched the trend line here. Price moved up like that. And also have an inner trend line. I will not be talking about that. Maybe I'll be speaking about that when I talk about my trend line entry strategies. So that is it on that. So this is what happened, and after that I also said I would talk about what happened during NFP. Wow, NFP was very interesting. For some people, they made it big in NFP on Friday, and some lost. I also lost during when I traded NFP. That's something with trading. You don't always win. There are times you lose, but I can say it out of maybe I didn't plan my trades very well. That was why I got liquidated. Yeah. So that is it. So if you can look at this candle right here on the 5 minutes charts, this was just the NFP candle, this bearish candle right here. So that is the NFP candle. See, after the NFP candle, price was moving up. NFP came, dollar was strengthened, although dollar was weak, but during the NFP make the dollar to be strengthened, and it dropped, tested its trend line, and what expanded into the upside. So that is it about that. So this is what actually happened on Thursday and on Friday during the NFP. So that is it on this video. If you find this video very interesting, I would like you to smash the like button, give this button some thumbs up, and comment under the comment section. I will try my best to react to those comments. And also, if this is your first time coming to this channel or visiting this channel, you do well to subscribe to this channel and tell a friend about this channel, tell a friend to also tell a friend. This will help the channel to continue to grow. Thank you for watching this video, and I'll see you in my next video. Peace out.